Did you know that as a business owner, you can get up to $26,000 in credit per W-2 employee that you had during 2020 and 2021? Many business owners know about PPP, but very few know about the ERTC, the Employee Retention Tax Credits. So in this video, I'll tell you precisely what ERTC is, how you qualify, and how you can get your credit. If you stay until the end of this video, I'll show you how you can get a qualification assessment done free of charge. So stay with me and let's get started. The PPP first round was $500 billion, and the ERTC has $400 billion. Updates are sent out every quarter, and at the end of the third quarter, only $18 billion of the $400 billion had been used. There's 95% still left over. So there's still a chance for you to claim your credit. Now you need to act fast because more and more business owners are beginning to become aware of it. And once it's gone, it's gone. Most business owners don't know that ERTC started at the same time as PPP first round. The issue is PPP was so easy to get, ERTC wasn't so easy. And to make matters worse, you couldn't get both under the Trump administration, so most people went for the easier PPP. When Joe Biden came in, he amended this and said, I want to make sure I give money back to business owners for keeping and retaining employees. So I want to make it easy for business owners. Even if you got PPP, now you could get ERTC. That's why you can now claim ERTC in addition to the PPP you've already claimed. Let's get into a bit more detail on Employee Retention Tax Credit and how it's different from the Payroll Protection Program. The Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act, was signed into law March 27, 2020. It included two programs to assist businesses with keeping workers employed. The Payroll Protection Program, PPP, administered by the Small Business Administration, and Employee Retention Tax Credit, ERTC, administered by the Internal Revenue Service. PPP funds are distributed based on 2.5 months of payroll, and a minimum of 80% of the funds must be used on payroll to be eligible for forgiveness. Additionally, PPP funds are not taxable as revenue, and you may still take deductions for the payroll covered by PPP. ERTC tax credits are credits or refunds for a percentage of payroll in each quarter that you qualify. There are specific rules for determining eligibility by quarter and limiting the dollars that can be claimed for each employee. In addition, PPP was more restrictive than ERTC because the whole point of the CARES Act was that businesses were given funds to pay up to 8 weeks of payroll, including benefits. You could use the money on your mortgage, rent, utilities, and payroll. That's it, nothing else. You couldn't just take the money and buy a car or something like that, and you couldn't even invest in new software for your business. The two PPP rounds were offered as loans, and there was an option to get them forgiven. You could fill out a pro form and go through a process, and the loan would be forgiven, and most people did that. However, they were loans. You were signing a note, and you were borrowing the money. As I said earlier, the essential thing about PPP was that it was forgivable. The second best thing was that they were effortless to qualify for, and I believe they helped businesses around the country when they needed it most. But PPP money is now gone. It's depleted. You can't claim it anymore. So when Joe Biden came in, he introduced the American Rescue Plan Act, providing additional COVID-19 relief for businesses. So what they did was the government amended the ERTC program, expanded it, and introduced some favorable changes. Businesses that received this PPP loan are now eligible to get this ERTC, or Employee Retention Tax Credit. ERTC is just a tax credit. It was created by the CARES Act and signed into law in March of 2020. It's a stimulus program to help business owners. Initially, businesses had to pick either the PPP loan or the ERTC. However, fast forward to March 1st, 2020, the IRS released a notice that allowed businesses to do both. I want you to understand this. This is important. It's retroactive. So now going back to March 12, 2020, you can now claim credits in arrears. So right now, you can retro-claim the credits for the periods in 2020 and 21. Now, you may be asking yourself, what is a credit? Well, it's called a credit, a tax credit, but it can be received as a cash payment from the IRS. There's no cap, no dollar limit on the amount a business can receive, There are also no requirements on how the money must be spent. Every dollar of wages can potentially be used for either the PPP or the ERTC program. The primary point is wages that you use to qualify for a PPP loan cannot be used for ERTC, and the IRS is particular about this. That's where the complexity begins. You really need to be an accounting or tax expert, probably a CPA, to get the ERTC claim through without issues. Several things are taken into account for the claim to be processed, including the unique details of how your business was impacted by COVID. For instance, did you shut down or was it a partial shutdown? Did you lose money? Things like that. You might be asking, why can't my accountant do this? Well, it's pretty complex. Most accountants are not specialists in this field. You can quickly check with your accountant to confirm. Most accountants are busy doing their regular day job. They don't have time to spend hours on this. This is why we've partnered with one of the largest CPA firms in the country that specializes in ERTC claims. The good thing is you can get a qualification assessment free of charge. There's no obligation to pay any fees until you know how much you'll get from the rebate. I'll talk more about this in a minute, but first, let's look at some of the business owners like you we've helped in the past 30 days. In Newport Beach, California, a business consulting firm with 19 W-2 employees received a $44,960 credit. A presentation design agency in Nashville, Tennessee with 21 W-2 employees got $162,979. A restaurant ownership group in Florida with 224 W-2 employees was credited with $1.12 million. A restaurant in Houston, Texas with 80 W-2 employees received $400,000 credit. A Montessori school in Addison, Illinois with 35 W-2 employees got $175,000 credit. As you can see, any business can qualify as long as you have W-2 employees you're eligible. So let's briefly cover the questions that most business owners ask. I got PPP funds already. Can I also get ERTC? With the CARES Act, employers could initially choose to apply for PPP or claim ERTC credits, but not both. PPP was more beneficial than ERTC for most businesses, so most companies with under 500 employees received forgivable PPP loans. On March 11, 2021, the American Rescue Plan Act of 2021 was signed into law and included many modifications and expansions to existing elements of previous stimulus programs. Significant modifications for business owners included businesses who applied for and received PPP funds could now also claim ERTC credits. ERTC credits could be retroactively claimed for businesses that qualified in 2020. ERTC credits were extended through 9/30/21 with lower qualification requirements. The per-employee cap on qualifying wages increased from $10,000 for all of 2020 to $10,000 per quarter for the first 3 quarters of 2021. The refundable credit amount increased from 50% of qualifying wages in 2020 to 70% in 2021. So the short answer is yes, you can claim ERTC even if you received PPP funds. How do I apply for ERTC tax credits? Unlike the Payroll Protection Program administered by the Small Business Administration, there's actually no application process for the employee retention tax credits. You simply claim the ERTC tax credit like you would any other tax credit by asserting to the IRS that you can legally claim the credit. When you claim a child tax credit, you assert this fact on your Form 1020 personal income tax return. The difference is that when you claim an ERTC tax credit, you do so on your Form 941 employer quarterly tax filing. For prior quarters, you must file an amended form, the Form 941X, to reduce your current quarter's tax contribution and request a refund of excess credits, which is highly likely. Another perk of ERTC is that since you can often estimate these credits in advance of distributing cash for payroll, you can file a Form 7200 to receive a cash advance to avoid waiting until the end of the quarter to apply for the refund. My revenue in 2021 is back to pre-pandemic levels, so I must be ineligible, right? Even though you may feel like revenue is back to normal, there are some items you want to consider before passing on this ERTC assessment. First, even if revenues return to normal in 2021, you may have qualified in 2020 and you can retroactively claim those credits. That eligibility criterion in 2020 was based on revenue declines from 2019 or if your business was partially or fully closed due to governmental mandate. Second, while your revenue may have returned to normal in Q1 2021, remember that we're comparing your Q1 2021 to Q1 2019. If 2019 was a year of growth for your business, your revenue levels 2 years ago might have been much less than Q1 2020. And lastly, if your revenues were down in Q4 2020 by just 20% compared to Q4 2019, you may also be eligible for Q1 2021. There's a safe harbor provision that few advisors are talking about, and many businesses are qualifying for $7,000 per employee in Q1 2021. I know it seems too good to be true. Still, the government wants to incentivize and reward you for keeping U.S. residents employed and money flowing through our economy as we rebuild bigger and stronger than before. I thought payroll taxes deferred in 2020 and had to be repaid. Does ERTC work the same way? You're most likely referring to the provision of the CARES Act that allowed employers to defer the deposit and payment of the employer's share of Social Security taxes. Those deferrals must then be repaid, with at least 50% of the balance due by 12/31/21 and the remaining balance due by 12/31/22. ERTC credits are not a deferral. They are dollar-for-dollar credits against wages you've paid, not taxes you've paid, but actual wages. These credits can offset future tax contributions, or you can receive a refund check. It's your choice. And you'll not have to repay these funds, unless you don't provide adequate documentation in an audit. Why isn't my bank or my CPA talking about this? Your banker, CPA, or financial advisor was probably very helpful when getting your PPP funds because they were effectively signing you to an SBA guaranteed loan. The SBA paid the bank administrative fees based on the PPP loans they made, so they were incentivized to educate you about the program and get all your paperwork in order. Compared to the ERTC, the PPP program was also a relatively simple calculation. 2.5 times your average monthly payroll, including health insurance and state unemployment taxes. From the conversations we've had with bankers, they have no interest in involving themselves in your employment tax compliance. For them, it's a liability and beyond their scope of services. What about my payroll service provider? Shouldn't they be on top of this? Your payroll service executes the fundamentals of paying your employees, paying your employment taxes, and filing your quarterly reports. But computing your ERTC credits requires visibility into your P&L and PPP forgiveness applications. Not only that, but the complex requirements around eligibility and allocating ERTC credits at the employee level while accounting for annual and quarterly qualifying wage gaps, and, well, you can probably tell why payroll services are not offering to do all of this for you. The payroll services that we've worked with so far are happy to provide the payroll registers that we need to perform the allocations, and they're happy to file the amended Form 941X with the IRS on our client's behalf. But that's the extent of it. In fact, most wise payroll services ask clients to sign an indemnification waiver before submitting a Form 941X because the payroll service can take no responsibility for the accuracy of the ERTC credits you're claiming. For them to involve themselves in the intricacies of this calculation is a liability and beyond their scope of services. Since they handle my income tax returns, will my CPA handle this for me? Whether your tax accountant is a CPA or EA, they most likely only prepare your federal and state income tax returns. However, ERTC credits are claimed against employment taxes on Forms 941 and cash advance through Form 7200. The complexity of the ERTC program is a beast unto itself, and every tax accountant we've talked to has said they focus on staying up to date on the ever-evolving income tax code, and they can't now become experts in the ERTC program as well. Suppose your tax accountant is comfortable determining your eligibility by quarter and year, computing your credits, and preparing contemporaneous documentation to support an IRS audit. In that case, you should certainly let them handle all of this. If you want a second set of eyes on this, we're happy to take a look. My bookkeeper has all my info. Can they handle my ERTC claim? Your bookkeeper should undoubtedly have access to all the needed information for an accurate calculation of your legal ERTC claim. They'll have your financial reports, payroll registers, and PPP loan forgiveness documents. The million-dollar question is, do they have the time? Do they have the time to dig into the text of the American Rescue Plan Act of 2021 and its accompanying reference laws like CARES Act, Families First Act, Payroll and Healthcare Enhancement Act, PPP Payroll Flexibility Act, and the Consolidated Appropriations Act? Time to read the IRS interpretations and FAQs and cross-reference those definitions with that of PPP, which was separately defined and dissimilarly interpreted in the Small Business Administration's bulletins and IFR. Do they have the time to ensure accuracy and eligibility determination, maximize your computation, and create the supporting documentation you'll need to support an IRS audit of employer taxes? So far, we've not found a bookkeeper who can take all this on while handling the day-to-day bookkeeping. If yours can, then take them up on their offer. We're happy to take a second look. Now, you might be wondering where we come in all this. We got involved when we started helping our current clients by referring them to one of the biggest CPA firms specializing in ERTC. Once they qualified, the rebate payment was always a 100% success rate. So we thought about, why don't we help more businesses take advantage of this rebate? And here we are, talking to you. For transparency, when you get your payment, the CPA firm will pay us a small commission at no cost to you for bringing them some business. So we're acting as an agent for the CPA firm. There are no upfront fees you must pay to get qualified. It's 100% contingent on your refund amount. If you don't qualify, you don't pay. Even if you're eligible but don't want to proceed, you don't pay. So this is 100% risk-free. Before I walk you through the claim process, let me go through why you'd want us to be your agent through this process. We now have a lot of hands-on experience helping our current clients through the process, so much that we can pretty much guarantee that working with the CPA, we can maximize refundable credits that'll be due to you. We already have systems to make it easy for you to the effect that your total commitment is only 15 minutes. We've negotiated with the CPA that our team will help with the front-end loading, so there are no upfront fees for you to pay to get qualified. Any payment due to the CPA is 100% contingent on whether you qualify and your refund amount. If you don't qualify, you don't pay anything. If you qualify, you'll only pay when you know how much you'll get and if you want the CPA to proceed with your application. So essentially, it's 100% risk-free for you. The documentation you get after the process is 100% audit-proof for the IRS. As far as we know, we've negotiated a foolproof deal with the CPA for you that no other agents are currently doing. The CPA firm we work with specializes in maximizing employee retention tax credits for small business owners. You won't find them preparing income taxes, compiling financial statements, or providing attestation services of any kind. When you engage us as your agent, rest assured that you've hired the best CPA firm to lock in this one-time opportunity for an extensive refund check from the IRS. We only get our small commission when we can help you successfully throughout the whole process until you get paid. If you don't get a rebate, we don't get paid, so it's really in our best interest to help you through this process successfully. Now that we've gotten that out of the way, here's how the process works. Step 1. Complete a questionnaire. You start with the 10 simple questions to begin your claim. Once you complete the initial form, we'll email you a secure link to an application questionnaire to be completed online. Step 2. Upload data. You'll then upload your 941 returns, PPP loan documents, and raw payroll data on our secure portal for assessment. And we'll be there all the way to offer any help if required. Step 3. Credit calculation. The CPA will calculate the credit you can receive from the IRS. Step 4. Application package. We'll prepare and help you file the 941X amended payroll returns. Once you've reviewed your credit and are happy to proceed, you negotiate with the CPA on how you want to pay the fees. They've made it very easy for you with several options to choose from. For example, you can opt to pay the fees up front, you can pay a deposit, or defer the costs altogether until you have the check in your hands. I don't believe I've seen any other CPA firm that's this flexible. Step 5. Get paid. The IRS will process your credit and mail you a check. It's easy to get started. Just click the link below and fill out the pre-qualification form. I'll catch up with you more once your application is assessed. Have a good day.